Hey traders, Akil Stokes here with Tier1Trading.com and welcome back to another episode of The Trading Edge, episode 11. If you guys are new, this is a daily video that my partner Jason Greystone and myself have been doing. It's going to be a part of a series that we run for our members once we have our official launch, but before then, we've just been putting it here on YouTube for you guys to take in and get a little bit of a feel of what you can expect. So there wasn't a lot out there on my radar today. So what I did was I went through the chat and asked people what they would like to look at. And there were a handful of traders that wanted to revisit the Eurodollar. Now, if you haven't seen my last Trading Edge video, episode 9, we're looking at the Eurodollar. The title was called Deja Vu on the Euro, because essentially we were looking for a very similar trade to something that we took a few weeks beforehand. And it was a very interesting trade. I got involved in this, and I've also been paying attention to the buzz on our chat feed. And there has been a handful of all different types of emotions. There has been traders that have been very, very excited. After all, we dropped about 130 pips after the initial entry. So a lot of traders were making money and they were fired up. There were traders that entered late on a different technique or a different tactic that, were getting a little bit nervous because they were seeing all the money being made and they didn't have a chance to get involved. And now, since we've retraced, right, you guys can see it over here in the chart, since we've retraced, there's another handful of emotions as well. There are traders that have seen themselves go into 130 pips of profit and seen it got sucked all the way back up to, what is it right now? Probably sitting at about 60 pips of profit so far. So what I wanted to talk about a little bit today is the emotional side of trading psychology, because that is the true key that separates successful traders from non-successful traders. Anybody can learn the skill of trading. It's not that hard to teach you a skill of trading. I can teach you that in probably about 30, 60 days, you'll have it down. The hard part, and the part that really takes time, is working on your trading psychology, mentally being prepared to handle these everyday battles that the market gives us. So let's head over and check out the chart. But first, if you haven't signed up already, guys, make sure you sign up on our new website, www.tier1trading.com. There's a link right below this video. Set up your free membership. Head over to the site and involve yourself on our chat. Again, it's been a great conversation about 24/7 here. I was talking to some of the traders yesterday and I said, I have a feeling that I'm going to get sucked into this like some type of drug and never be able to get off. But set up your free membership, join the chat, and do me a favor. While you're at it, shoot me a friend request, because we all know, right? If Facebook has taught us anything, we all know that a person is judged off the amount of friends he has on social media. And I want to be popular. So shoot me a friend request and of course I'll accept. Now let's head over to the charts. All right, so in front of you is another look at the Eurodollar here. And just the recap, you can kind of see my notes are still on the screen. What we were looking at on Wednesday was a double top. We got a beautiful double top right here. This is a beautiful, not quite symmetrical double top, but close enough. But what I really loved here was the fact that the market tried to make one more run at those highs. You can see the wick. If I give myself a little bit more real estate, you can see the wick of the candle really test those highs, test those extremes. And, obviously for a second, it looks like, or for maybe a few hours in this case, it looked as if price were going to break and close above that level and continue higher. However, we were sucked down by the end of the candle, creating a very good bearish sign. This is what I call, it's more of a neutral bullish candle, but I would look at this as being a bearish candle, this green one, despite it being green. And then after that, we have even more confirmation with the lower low, lower close, the engulfing candle here. So a very good close here on the Eurodollar. And again, straight away, we went down about 130 pips. I got involved at about 122.90s. We went all the way down to about 121.60s, making us very, very happy. And so you're newer trader. Here's a rule of thumb, right? You don't count profit until it's actually in your bank account. So I never look at a trade as being profitable until the trade is closed out. But one of the things we were talking about on the chat as we were trading right here, I said, hey traders, if we can get a break of this 122 even handle, this $1.22 level, that will be a good sign for bearish continuation. And as you can see, we did get that break, right? Making a lot of traders happy. You saw a lot of traders fired up. Yeah, it's going to go lower. It's going to go lower. We're going to make some money. And then lo and behold, wake up this morning. What have we done? Well, we've retraced all the way back up from about 121.80s to about 122.50. So we retraced back up another 70 pips. And this can be very scary to many traders. This is when emotions start to kind of dictate your decisions. And it's really a combo between a trader's emotions and a trader's lack of experience with technical analysis. And that's all going to work together in keeping you sane. But what many traders will do, and let me know if you've been here before, seriously, shoot a comment in the comment section below. Let me know if this has been you. You see yourself in this trade. Price is broken and closed below. You're up 130 pips. You're happy. You're excited. You got new swag in your walk. You're feeling good. You wake up. You see the market has rallied back 70 pips, and you're like, oh no! Right? You start to go into panic mode, and now you're thinking, well, I was up 130. I'm still up about 40 pips right now, or 50 pips right now. Maybe I should just push that button and exit because some profit is better than none profit. Some profit is better than no profit. Or maybe you've heard the old saying, which is the most ridiculous saying ever. You can't go broke taking winners. Sure you can. And this is a good example how if you sacrifice your trading, if your winners don't win, if you don't allow your winners to win the amount that they're supposed to win, you can go broke taking winners because your losses will now not be covered. And what I mean by that is, again, in the previous video, and this is why it's important that you keep watching these things, we talked about how this year's been up and down. I think I have 3 winners, 2 losses. So win, loss, win, loss, win, like that. However, still a very profitable 2018. Why? Because my winners are much bigger than my losers. So even if I were to win the same amount of time as I lost, even if I were to lose more than I would win, I would still be in profit because what I win is more. I keep my losses small. I allow my winners to be bigger. If you invert that, right? If you keep your losses normal, but now you're sabotaging your winners and your winners are small, well, now your winners aren't going to make up for your losers. So in order to be a profitable trader, you have to win a higher amount of the time. And the truth is your system is going to have a cap. No matter what type of system or strategy you're trading, there's a cap on how much it will win. A 60% winning system or strategy, maybe on a good year, may bump up to 65, 70, but it's not going to win 80% of the time. It's just, you got to operate within your means. So you don't want to sabotage your trading at this point. You want to stick to 2 things. You want to be strong with your trading psychology, your trading mentality, but you also want to pay attention to the technicals, right? There is nothing here so far that has told us to be fearful of this trade. We've got 2 nice zones right here. We've got a nice zone right here. We have a nice zone right here of selling pressure. We have a break and close below our previous level of structure. None of our rules on how price should move have been violated. And if you know those rules, if you're comfortable with those rules, that's going to give you confidence within this trade. Another thing that's going to give you confidence in this trade is really just believing in yourself. Hopefully, if you took this trade, you took it because this is something that you've back tested. This is something that you've worked on for hours and hours and days and weeks and months, and you've built that confidence in your system. That's one of the reasons I always encourage manual back testing. I don't really believe in, throw your system into a little mechanical deal and let it spit out the numbers, right? That's good. It tells you if your system is profitable. And if you're trading an automated system, that's fine. But if you're going to be manually trading, meaning you are physically going to be pushing the buy and sell buttons, you need to manually backtest. Because when you go through that process of looking at hundreds and hundreds of trades, and it's horrible. I hate it. Well, I like the beginning. I like the end. I hate the long, drawn out middle, right? It's like a movie. You get action get a lot of action in the beginning, and then there's something good coming at the end, but the middle is just like, come on, just get to the point. That's how backtesting is for me. But when you go through that process and you're taking trade and you're manually inputting each data on the trade, you go through the different swings. So you see the highs and lows of your trading strategy. And there are times you get really excited, like, oh man, this is going to be the best system ever. I'm going to win some type of award and be a millionaire in a month. And then you see the lows, you're like, oh man, why am I still testing this thing? It doesn't work. And being able to go from one to the other, it builds mental toughness in you because you know that you went through bad patches in the past. However, they still turned out good in their bigger results. Or in a particular trade, you've seen trades like this where they've looked like they're going into profit, and then they reverse against you, but then eventually they come back and go into profits. That's one way to build your mental toughness. Another way is surrounding yourself by like-minded individuals. I mentioned the chat earlier. One of the great things that I've noticed in the chat is we have a handful of different traders at different levels. And we have younger traders or newer traders that are panicking. And then it's really, really, really cool to see the older traders, the more experienced ones, come in and just lend their 2 cents saying, hey, relax, man. Stick to your stops, stick to your targets. You got this. Or, hey, I'm in the same trade. Here's what I'm doing, and lending advice. And it may not seem like much, but just that little bit of support that those traders are being given, that may be the difference between them clicking that sell button and exiting a trade prematurely, or staying in a trade and potentially holding out for profits. Another great example, I don't have it with me, but I put it on Twitter the other day. A trading buddy of mine, he was in a New Zealand dollar trade for I think like 2 months, and he finally hit target twos for about 600 plus pips, and it was one of the most frustrating trades he's ever been in. But I also told him that it's going to be the most rewarding one as well, because being able to sit through it for 2 months and watch it wiggle up and down and stick to your guns, right? Being rewarded with that profit, there's never going to be a trade that's going to hurt like that again. And that's just going to build your toughness for trades to come. So an example here, stick with this. What I was supposed to talk about a trading example. I'm sorry, guys. A trading example for you intraday traders. My bad. I got caught up in a rant here. A trading example for your intraday trader is going to be this. We talked about the lower low, lower close under that 122 level. Wait for price action to come back into this level. You can see we're getting there right now. If we were traced a little bit higher into these highs right here, right below 122.80s, that's going to be another opportunity to sell. So you can look for price action to come really anywhere in this zone. But obviously, the higher you wait, the better your risk reward is going to be. And you can easily set yourself up with a trading opportunity where you look to get short right here and trade it back down to retest previous structure lows. And you can see that, whether you're taking a stop right above these highs, or if you're taking a longer stop or a larger stop, even above, this is going to be a little safer version right up here, you're still going to get a pretty decent risk reward no matter what. So there still is a trading opportunity at hand. Again, I apologize. I didn't realize I went 10 minutes, but important subject. So anyway, trading opportunity here in the Eurodollar if we retrace back up the structure here. 2 other ones that I was looking at were the Euro Pound. We'll go through these quick since it's already almost a 15-minute video. Euro Pound on the 4-hour, you can see we're right at previous structure support right here. Not a bad trading opportunity for you structure traders. Another one's going to be the Pound Yen. This is an interesting one. This is not one that's on my radar, but it was one that a trader in the chat wanted me to bring up. The candle has changed. At the time, this was a higher high, higher close candle. And what it looked like was a no-brainer for a trend continuation trade. So a no-brainer for looking for a retracement and a continuation higher. And you can see that probably a little clearer on the hourly time frame here. You can see the higher high, higher close. We broke out this flag formation or flag pattern here. Broke it to the high side, look for a retest either at this black line or anywhere in between these 2 black lines, and then a chance for the market to go higher. And initially, it looks like an awesome trade because you're saying, Akil, well, the market's in the middle of nowhere, right? If I get a stop loss right here and I look for an extension, I'm going to have an 8-to-1 risk reward. Here's what you want to be concerned with. On the weekly, and I remember this trade because this was one that this is one of the bigger trades I took last year. We had a massive breakout here in the Pound Yen. And we got to this level, and this is where I ended up taking my final profits at, right above this 151 level, because what concerned me was this area right here. And more particular, this wick, the fact that after we broke below here, I believe this was all the Brexit stuff, after we broke below here, we came back up to try to retest this level, and it was beaten down pretty aggressively. So I'm not too keen on predicting any type of extension here because we're technically, for me at least, we're in a potential reversal zone. So I'm not excited about any type of trend continuation trade. That's me personally because of what's happening on the higher time frame. But it's definitely worth a shot if it's something that's in your rule book. Again, if you allow price action to come back down to these lows, you have a very nice shelf here. you can set yourself up with a pretty decent continuation trade. And if you want to be more conservative, here's how I would look for it. I wouldn't mind taking a trading opportunity right here. My thing is, I'm just not shooting for the extension, so I don't even mind shooting for a retest of structure here at 154s, or probably a little bit lower 154s around here. But I have no intention of holding on to secondary targets, holding on to extended targets, and looking for any type of continuation. So for me, we're gonna have to have a deep retracement back down into the structure shelf for me to be interested. But that's just my perspective, guys. Of course, if trade what you see. I'm not here to give signals. I'm not here to give the say all be all. These are just my opinions. That's all it is. So I appreciate you guys hanging with me, especially for you guys that made it through the rant and to the actual trading opportunities. Again, don't forget to set up your free membership on trading. Gosh, that's twice, on tier1trading.com. Shoot me that friend request as well. And as always, leave me a comment below this video. Let me know what you like. Let me know what you don't like. And I'll see you guys. Ooh, this may be the last one. I probably won't be doing these next week because we have the live event. I didn't think about that. I'll have to see. This may be the last time you guys see me here on YouTube for the Trading Edge video. I don't know, but I'll figure it out. You guys that are following me, you're in the mix with me on social media, so I'll let you know. But next week we do have our live event, so I'm probably gonna have my hands full with teaching and trading and all that other fun stuff. Anyway, plan your trade your plan. Hope you guys have a great trading day. Hope you guys have a great weekend, and take care.